I got you. Get me what? Super slow morning for me. I haven't even taken a trade yet.
Check, check, check. Ooh, look at that. I think we are good. Got a lot of stuff going on. Apologies if I have any um, crazy technical difficulties. We get set up here. Believe audio mic check. Cool. All right. I'm just gonna get to it.
Yeah.
So I think I'm feeling good about this week, for sure. Definitely got some major stuff in the back half. But if you're new to this, really, it's just every Monday, kind of, if you're doing this professionally, if you're doing this, for any significant period of time, or even for, a hedge fund or something, you'll always have a Monday morning meeting. And in the meeting, we are going to go over what are the market moving events that we need to be aware of this coming week, and maybe some how do we trade around that. Right. Also, a couple things here and there about what's going on in the market, and what we're taking from that. If that makes sense. So that said, before we get started, just got to point out we are an options trading group. A lot of the guys on Discord are option traders. So before you start trading, call 1-888-OPTIONS and get a copy of standardized options and risk characteristics and risk of standardized options before you start trading. Cool. That's out of the way. I actually had a quick recap. I didn't do that last slide, but I think from a headline perspective, there's a lot of stuff to go. A lot of stuff this week. I think really the biggest two things, the Ukraine and Russia tensions. Are we gonna intervene? Is Russia actually gonna invade? We'll see. But market moving, it was really Powell's speech, right? So again, the Fed's charter is full employment and price stability for the dollar, right? That's what their job is. What he did say is that rate hikes will begin roughly in March, right? And that they've been slow to react, essentially due to COVID. And he mentioned a lot of supply chain issues. Most of that we really knew, but what we didn't know for sure was that this rate hikes beginning in March. I think that the market has been screaming that we need some decision, some kind of definitive information on what's going to happen here. The market hates indecision, and the market hates uncertainty. So for me, this rate hikes beginning in March is actually a sign of some kind of certainty, So hopefully, moving forward, we'll have a little bit more. I think last week the market really just digests it, and this week, this is the last day of the month today, and then Tuesday forward, we're in a brand new month, and I think we start to see a trend begin to appear. That's my best guess, right? GDP, we had some actually pretty good GDP numbers come up, best since 1984, pretty crazy. Although the next quarter, I think Morgan Stanley and a couple other uh, firms are looking at significantly lower. So we'll see, right? Q1 GDP is, I think, they're estimating to be negative. So kind of battling that back and forth. Other things, semiconductor supply problems for sure. We know that's been an issue. Higher prices likely to continue. So how is that going to fare for AMD, NVIDIA? We'll see, right? AMD got the Xilinx deal done, NVIDIA didn't. So definitely one to watch for sure. See how the market digests. This is a pretty big drop recently, so I think we're due for a little bit of a bounce. A flatter yield curve in general. I think a lot of people have been talking about really stagnation, right? Versus like recession, things like that. That's the yield curve. Definitely want to watch for. So a lot of people looking at that. It's going to be a signal really for the rest of the market. So we have 7 more FOMC meetings to go. Goldman Sachs calling for 5 rate hikes this year. Bank of America is calling for 7. At the end of the day, we're going to see a lot of rate hikes, actually. At the bottom of this slide, Bostic, that's a Fed president, says they're looking likely at a full half point in interest rates this year. So how is that half point going to be dispersed over, 5 rate hikes, 7 rate hikes? We don't know. There's a site that you can actually go to. A lot of us looked at that a lot during the pandemic on how many rate hikes is the market pricing in. But in general, I think we have, what's for sure is that we have a little bit more clarity, right? Whereas before it was like, well, when are you going to do it, right? What's happening, right? Now we know it's in March and we have an idea, at least a half point sometime over this year, right? Chevron CEO, they had their earnings report. They're talking about $100 a barrel oil again. So just be on top of that. I think the energy sector trade has been pretty good. OAH has been a pretty staple, oil services staple trade. Devon is a pretty good performer for me. And I think that trend is going to continue as we move forward. As we look into the week further, we have earnings season in full blast, and this year, I think, at least this quarter so far, has been the year of the straddle, right? Typically, when we're trading earnings, and we do trade earnings very heavily. If you're in the group, you'll know we do have an earnings course that's amazing. I love it, and it's completely volatility trades. What we've been seeing is that, the underlying stocks are actually moving more lately than what the options chain is actually pricing in. So our trades are still working from an IV perspective, but if you're trading straddles or even some strangles on the shortest dated expiration contracts before the earnings releases, you're actually going to be doing pretty well. Also, maybe even a little bit better. So if you're in the implied volatility event course, we'll actually go through more into legging this week. We got 3 more sessions to go, and then you're on your own to make your own trades. But yeah, definitely an awesome system if you're not familiar with that. So that said, we've got 20 down, 10 more to go. 2 of these Dow 30 components, 2 coming this week. Of the 20 that we had so far, 4 have missed: IBM, Boeing, McDonald's, and Chevron. Those missed. Everyone else still beating. So we'll see how the trend goes. But this is still fully intact. Oh, this is that course. I'll just go ahead and move forward. So this week, these are the days of the week. In red, I have our biggest economic data days. So Thursday and Friday are going to be the biggest days to note this week. I think today, tomorrow, typically, the market starts to, you know, I'd expect some pretty good days today and tomorrow, and then maybe a little caution as we get into the latter half of the week. But we'll see. That's that, you know, prognosticating, so you never know. Um, Again, if you guys have questions, you can type them into the YouTube chat. It is a little delayed, so hopefully I'll be able to get it as we go through. And I believe Steven is also on audio
Yep,
as well.
I'm here.
I hope. So, that said, let's go ahead and move into this and get into what we're looking at. So today, we already had some of these numbers come out. So Chicago PMI, Dallas Fed Manufacturing Index. This actual number came in significantly low for the Fed Manufacturing Index, and PMI, we're pretty good. So not super market moving. I think this one's, we'll see how this digests, or if this is even accurate. This, actually, I could pull this up. Came from their site here. Anyways, you know what? Let's not get too off topic here. Let's move on. So tomorrow the biggest one, ISM manufacturing numbers. So this, again, all times are in Pacific. So apologies if you're not on the West Coast. These are my time zone, my times. And apologies for the cough. So, first column here is going to be the prior month's numbers, or the prior number, and then on the right is consensus. So again, if you're new to looking at this kind of stuff, anything that is at consensus or around the prior numbers, that is not going to move markets. What moves markets is something that's completely off the scale and unexpected, right? So if they're expecting something good, same thing goes for earnings, by the way. If they're expecting good numbers and it comes in good, that's not going to move a market, right? If they're expecting good numbers and it comes in bad, that's going to move a market. Or if they're expecting bad numbers and it comes in good, that will move a market. That's really what we're looking for. Second number here is the JOLTS openings. I think that it's pretty safe. I mean, everyone knows the jobs are there. It's really just a question of whether or not people are taking them. So openings, I don't think is going to be a big market moving data point like it typically is. Construction spending actually might be. So construction spending, this is going to be economic expansion kind of thing. We know that housing prices are still going up, but we do want to kind of keep an eye out for this number and the manufacturing new order number. So manufacturing, service sector, ordering new things, more supply. They're expecting higher growth or expansion, so that's going to be good. Manufacturing employment, again, this was, the services sector was probably the biggest one. Let's go ahead and move on. Wednesday didn't look like a big economic data day, but actually we do have an OPEC meeting towards the back half of the day, and I think that's going to be pretty important to watch. ADP numbers do come out Wednesday morning. They used to move markets quite a bit, and they have just been so far gone, like so far off, and just not reliable. I don't think this is gonna. I think this is like gonna be off the list, almost completely moving forward. We'll see. Petroleum status oil report comes out. This actually has a lot of data points in there. I think oil is going to be a pretty important theme this month, just to keep an eye out. If everyone thinks oil's going to 100, I do believe that theme will continue to play out and likely pay out if you're trading it correctly. So keep an eye out for that. The first big day of the week for us is going to be Thursday. So Thursday we're going to get our initial jobless claims and a preliminary non-farm payroll number. So NFP, non-farm productivity. Non-farm productivity. Consensus looks like it's going to be a little bit better, but we'll see how that comes in. The real number is going to be the day after. Second or third biggest number for Thursday is going to be manufacturing PMI, non-manufacturing PMI. So that's, again, pretty critical number to note. Take a look at these previous numbers and the consensus numbers. If what we get on those dates are, far off of consensus, expect the market to move. Right? That's what I can say. I have unit labor costs up here also. This has been, I don't know who makes these consensus numbers, but I can tell you that does not look right to me. I was talking to one of the guys, actually one of the clients that we have, and man, I don't know if you guys see this, but I live in the Bay Area, and we were having a conversation about someone, applying for a job, and he was like, yeah, they asked for, X dollars an hour, and I was like, what? And then we're going through the conversation. He's like, yeah, so do you think that's too much? Like asking for, I don't know what it was, like $25 an hour, $30 an hour, and I was like, thinking about, in what world does the applicant actually request like how much you're gonna make? But apparently that's how the market is right now. So yeah, if you don't have a job, or if you're looking for a job, apparently, at least in my area, the applicants are setting the terms. So unit labor costs, I don't see how they could be down. I don't see that changing anytime right now. Even for us, I still think, even though stimulus is kind of going away, I think a lot of people are still just living off savings, man, and trying to play the market. And this current generation, I don't even know what generation it is, like Gen Z, Gen Alpha, they're like, whatever they can do to stay away from a 9 to 5, oh, they're doing it. We also, so two Dow 30 components reporting Thursday, Honeywell and Merck. So keep an eye out for all that. This is the first big giant day of data for the week. Excuse me. And no video today. I'm just way under the weather. Friday, so first Friday of the month, every month, we get this non-farm payroll number. That number sets the tone for the entire month, typically. Moving forward, we get the unemployment rate, consensus at 3.9%. Non-farm payrolls, we get at consensus 153. This is how many more jobs are made, created, taken. Previous 199. I don't know that this is going to be a big difference, but this does set the tone for the month ahead. Average hourly earnings, again, this is going to be a big deal. How you think that the labor cost is going to go down, but average hourly earnings is going to go up. Those are the kind of things that doesn't make any sense to me. But again, we'll see how it plays out, right? One of the biggest things, I believe, is this participation rate. So when we get participation rate, like if consensus is 62, if we get something like a 63% or higher, that's going to be pretty good for the market. So that's actually one of the ones that I'm going to be looking at for sure pretty closely this week. Non-farm private payrolls. This is, in my mind, going to take the place of my ADP view. So we'll get that also on Friday. Cool. So Baker Hughes rig count. This is just every Friday comes out the, how many nat gas and oil rigs are open at any given time. This has slowly been going up. So they've been opening up more wells, more rigs. You would have thought that maybe that would help oil prices come down a little bit, but no, definitely has not. We actually have 46 companies reporting earnings on Friday. Not typical to see a lot of earnings on Fridays, but we do have it this week. So Thursday, this is just a heads up. If you guys have this, actually, I think I can send this in the chat. This is a webinar we have going Thursdays. This is free. So if you're not in this, feel free to join. 1:30 p.m. Pacific. We're going to be going over essentially swing trading, really 2 to 3 day or 2 to 5 day trades, and how to really use them, right? How to use options with them. A lot of people do outright calls and puts. I was watching CNBC this morning, and they had the IBKR guy on, And he was like, yeah, a lot of people are trying to figure out how to do debit spreads now because a lot of traders were really just starting out with outright calls and puts. I call outright, so just buying a call, just buying a put. But now starting to realize, well, it's a lot less risk, same reward, or similar reward at least, if you use spreads, and really how to use them, right? So we're going to be going over all of that this Thursday at 1:30 Pacific, 30 minutes after market close. If you're in Discord and your server has our bot, we'll go ahead and post this link again as we get closer. And this is really the fourth installment of our current options acceleration course. So I think that is that. Let's go ahead and get to the markets, right? So first check. So this is the first look. Pretty much every time we take a look at the markets, you want to have your, handful of major indices that you're watching. So for me, I got 1, 2, 3, 4 Qs, SPY, diamonds, and IWM. Let's see. There you go. A little bit better view. I am using currently a 15-minute chart. This orange box here, this was last week. And the size of that box is the size of an average week's range. And so do you see how it kind of worked out? Very, very choppy last week, but that's how it works. I think, what day was it? Wednesday. So when I look at this stuff, I want to see, Wednesday was, what was the date on Wednesday? 26th?
Sounds about right. Yep.
Yeah. So Wednesday was the big FOMC meeting. So this situation right here, we want to take note. Whenever you have a fundamental event, like an FOMC meeting, that moves the market, I think you want to take a look at these kind of levels. So let's just take note there. So at that point, so this, I'm going to move this box out of the way. Man, if my keyboard will start working. And I'm actually going to assume that we have an up week this week. Somewhere around here. But we want to say, okay, at what point did markets really going to kick in and defend the market, right? I don't need this white line. So let's say right here. Right around here. Actually, we saw it twice. So Wednesday, here is our low. Wednesday. This got tested once, twice, and we're off from there. Wednesday open, or Wednesday high, right about here, and we're testing it as we speak. So these kind of two levels, and I think, realistically, we could probably get into here. These two levels from here to here, we might bounce. But if you see an opportunity around 430, just know, hey, look, this is where the market really stepped in and people started buying. Very, large buying. You see the strength of the candle, how big that candle is right there. Right off that same exact level. Once, call it twice, definitely 3 times. So if you do get that opportunity, look at that, even beforehand. So 428.86 is a pretty key level for me. Prior week low, 437.95, I'd also see as a pretty key level as well. Steven, are you on audio?
Yes.
Let's see. I think.
Can you hear me?
I might not be able to hear you. Hold on. You there?
Yep.
Okay. Do you have any levels right now for the SPY?
My levels are pretty similar to yours. I'm watching 444, which was the top of basically the peak yesterday, just that very tippy top. But other than that, my levels are pretty similar to yours, within a few pennies.
Oh yeah, you're right, exactly there. So we're sitting on it right here.
Yeah.
All right, so those are basically levels that you want to see kind of look for some kind of candlestick pattern or something like that. Whatever your system is that you're trading for price action, to see a reversal here. I sent a note, or I sent a trade actually. My one trade today was short the VIX. I think Monday mornings, VIX is the highest, or volatility, short volatility. I think we start to digest this. So regardless of direction, I think we stabilize, and that's what that kind of trade looks like. I can also, let me see if I can move this to a monthly chart. So we're going to be closing in. So this is last month's high, low, right? And so I'm just going to move this over just because I don't think we're going to get. Now this is January, high, low. February, we could see very likely, like the entire month, something like that, which would be very typical of of whatever trend. And then from there, after February, we'll see where it goes. Maybe it goes this way, right? And we're back into this broadening range, right? Like higher highs and actually lower lows, low, lower low, lower low, right? High, higher high, higher high. We could see that, and or we could see go either way. So we're not out of the woods yet. That's my point. But this month, I think, is a digestion month for the market. Cool. So that's SPY, right? When we see these broadening ranges, you just got to be careful. This is where, when you get to these pivots, you could do straddles, long strangles, because it can go very like sharply in either direction. But we'll see. All right, so the Qs, same thing. I want to take a look at where are we on Wednesday. Qs, definite same broadening range. We have that broadening range across the board. I'm going to move my weekly markers out. All right, so that's prior week high or low, prior week high, and for the most part, the month, we're essentially done. I do want to have last month's low actually still marked out right here. So this was, again, we took this box here, average weeks range for the Qs, started out, looks like right about there, and that's exactly what happens, right? So moving forward, I'm on daily candles, maybe we get around 370, which I have a resistance level right at 369. So high-end target for this week, right? And that's it. Nothing really further than that. And then let me drill into the 15-minute, and let's see Wednesday. Here we go. So Wednesday, again, here we are. And where did market participants really jump in and defend? Right? Right there. Right? Where's that top? Yeah, kind of two tops. Right exactly where we're basing once again. Right around 356.70. And really on the low end, 341.50. That's where they started really jumping in. So you can see how that level was defended here. So this is Wednesday's FOMC meeting. Big fundamental event. We'll take note. Look at those candles, how big, like, and just like full they are. That's when you see huge volume coming in, right? That's a situation where you want to take note, right? And then defended here, 340.78. I think this will serve as a short-term bottom. So if we do get here, I would be a buyer, no question. And then again, high-end target for the week, 369 and change on the Qs. And that's essentially, this is what you do, right? If you're looking to be, a professional trader, it's all about average moves, right? Same thing here. We have average move for the Dow, right? We're just going to take this, kind of put it right up here on top of the prior week. Let's say somewhere in here. Wednesday. Oh, look at this. Wednesday. I have. Oh, these are. I don't know, these big giant lines. What is it? Alt J? Yeah, there it is. So Wednesday, and these are sharp. Here's the Wednesday sell-off, right? Low end, right here, for the diamonds, 338.5. Defended pre, defended here in the first hours of trading Friday. And we continue to bounce. This pivot here, right off the prior month low. Again, key levels. This is just how it works, right? So I want to take a weekly chart. And again, this is what I'm doing. You can have your own system for price action. But I'm going to mark where is last week's low, last week's high. We have an inside kind of candle starting today. I can't really go long on the diamonds until it's over 348. And even then, once I do, what's my target? Right? Well, if we can hold above there, I think it's very clear. Okay, your target, for sure, 355, right? If not, this index could actually chop in this range for a little while, and not until it's below 330, really, would you want to be short anything like that. So that's from a weekly perspective. Daily, you can kind of drill in. We're still not quite above that level. So just kind of be aware. I think we could. But again, an average week's move would take you to where? 355. So if you get a day that's clean above, not like breaks 348, but is like clean above 348, then I think you could take a target around 355. And I can't really short this until you're at least below 340 or lower. So hopefully you're getting some targets on some indexes. I think IWM actually probably got the biggest beta here. Let's go ahead and take a look at the weekly. So I'm just going to, again, move my weekly candles. Take a look. Where's prior week's high, low? Cool. January's more or less over, so I don't need to do that. But I'm going to move and tag. Okay, January low of the month right there. Also, last week's low. So, do I have a reversal set up here? I do. 1, 2, 3 candles reversal, right? First target is just simply about 200, 199, right? I think we can get there. And then you could really go long if you clear 203. So I look at this one and I'm like 203, 208. Yeah, we can start hitting some pretty good targets on this guy. So see how this is a pretty big resistance level. If I were to pull this straight across, if we can get back up here, I think, just looking at this, we have a good chance, likely just to test that, right? So short term, call it a dead cap bounce trade. Short term, I'm liking that 210, 208 target. And then we'll take a look from there. Could it go higher? Sure. Am I going to trade for that now? No. So I was looking actually at a March 200, probably 210 debit spread for a couple $100 with like it'll probably be like a 6-to-1 risk reward on that. See, I don't know where my, let's go 15, my average range bar went on this guy. So let's do the same thing one more time on this, on a 15, and look at Wednesday here. Ooh, so this is Wednesday. We don't have the same kind of price action we saw on the rest of the indices. And again, we're a little bit lower here. So this didn't hold, but this level did. So for now, I'm still going to look. Let's call it, here's your low end of this wick right there. Once we closed above that, we've opened today above yesterday's high, and we are continuing higher. This looks good. And again, to that, target 1, target 2, and then reassess. I think that's where we are. So here's the VIX. Again, option traders always want to have the VIX in mind. This is where, the fear index of the S&P. Also, how inexpensive are your options. So anything above 20, you're pretty expensive. Anything above 30, I'm staying away from debit spreads as much as I can. I'm only in and out very short term, low IV contracts, which is what you saw from us last week. Again, just kind of quick spurts. I don't want to be exposed to a ton of volatility, but can we use it to our advantage? Absolutely, we can. That said, I think we get back into this range and we head straight towards 20 one more time, and then we have to caution, right? This is the typical, and I'll go into a 4-hour chart. Typical structure of the VIX, right? We can and we do very frequently. Oh, please don't freeze, computer. Oh wow. Am I there? Whole computer froze.
Oh man.
Yeah. So, glitchy. Apologies. Wonder if that messes with the, oh, no. Yeah, they got the same. This is what happens when you're trading a remote office. Well, anyways, my point was, as this internet tries to catch up, man, this is gigabit too. So, apologies. We'll get this kind of move like this, right? And actually, even some little pops like that, right? And then as we come down, then we'll get a blip, right? So this kind of blip is more or less what I'm expecting to see. Hoping to see. At least I put my money on it. Which would be something like that, right? So somewhere around 20-ish. Excuse me. On the VIX. If we get back here, then I'm going to be looking to put some more protection on. We went over some hedging positions in our options acceleration course last week, which, by the way, I just kind of totally under the weather, so I will get that edited and out, but just give it a little bit. I need to get to the office to where the actual video editing software is. So that's what I'm looking at right now. So that's the VIX. The hedge would be a ratio spread, so just be on the lookout for that. Bitcoin, we'll just take a look at this real quick. So Bitcoin, man, oh man, weak. So floor for me, Bitcoin, 29,000, give or take. I'm like, can we just get there already and be done with it so we can get this over with?
Seriously.
Yeah. So here's what I'm thinking. Again, crypto bull for sure. Not so much Bitcoin specifically, but the space, absolutely. Do I think that we could pop up? Yes, definitely. I would be very careful once we get to this remember again, purple line's prior month highs and low. So 42 and change, big resistance level. We've seen it before. At that point, could we get a quick flash crash down, something like that? Yeah. Be very careful. I'm not saying this is going to happen. I'm saying this is plausible, especially in crypto, since we don't have any circuit breakers. We could. That's super low. I don't know. Just take that for what it is. That's the last kind of pivot week that we have. Oh, that's sick. That's very sick. Ideally, I really just hope that it's more like a blip. But it'll be fast, whatever it is, right? It might be fast, and then off to the races. Late February. That's my guess. I don't have a magic ball. So, prognostication. That is what it is. TLT interest rates. So, TLT is 20-year bond ETF. This is specifically not the yield. What we know that's true is that rates are going higher. If you wanted to find the easiest trade in the market, aside from the VIX, I think this could be, just a layup, right? So this kind of orange box, average weeks range, right? Are we trading in that? Yes, we are, right? We're not quite ready. The market's still kind of like, kind of choppy about it, but what we know is that rates are going up. When rates go up, bonds go down. Rates are the yields, right? So this is not the yield of the bond, it's the bond itself. Inverse relationship. So, yeah, at least a non-bullish bias here. Maybe selling a call credit spread around like 140, 144, 145 if you happen to get a little pop at some point. It doesn't even have to be super wide, just something tight, right? And like a risk reversal, kind of like what you saw in the VXX trade, this morning. So selling an upside call spread, buying a downside put, or maybe a put spread, just to kind of hedge off some of that extra volatility, get a little handoff in terms of like having to pay to hold the position open, or getting paid to hold the position open. So that said, I'm going to move this. Come on now. Sorry, that's how bots look, by the way, if you didn't have that. I'm just going to go into the server. And I know Steven posted some watch lists last weekend. I've been kind of hesitant to post some of that stuff, honestly, just because I feel like whenever I chart them, it's like Monday morning, it's like, boom.
The whole chart just gets broken?
Or it's completely played out, right? Like the whole
Right.
thing plays out. So that's my guess is what's happening to you. I don't know, right? So the first one here, you got AMD, right? So touching $100 psychological level. Yeah, totally. RSI bottom out on a daily. From a technical perspective, looks ready to move back to the upside. Earnings on Tuesday present potential opportunity to play post earnings if we can hold above 100. Yeah, so this.
Yeah, and it already kind of took off this morning before I could even touch it.
Oh, yeah. Right. So, let's see. Here's where we are today. I'm just going to use a 1 hour chart. Hope you don't mind. That's what you were using before, I believe. Oh, come on, computer. Oh, yeah, 111. So it's not bad, right? I'm going to do the same thing. Move orange to weekly, prior week high and low. So prior week low. Ooh, you got a nice inside bar so far. Kind of showing up. Daily. And this is, you want to trade inside, right? Yep, there's your inside bar yesterday. Boom. I gotcha. you're at your targets right there, right?
Yeah.
First target, right? So now you have to wait and you have to see, okay, next thing to see is like, if in a reversal pattern, what would that look like? Well, that would look like another candle, clean above, right? Clean above, 111, etc. So we can drill in. Here we are, testing this target, right? So yeah, you're you're there. And if you can, wow, what kind of move is that just today? That's 7.
Opened at like 107-ish.
Oh, geez. Yeah. That's tough. Let me throw an average daily range on here. Yeah, so actually, you're within average daily ranges, right around 115, believe it or not. we drill that in 15. But you essentially just need to kind of like pull it back, pull it back, pull it back. Next pivot, right? So here, is you're looking somewhere around here, I'm assuming.
Yes.
So as traders, we want to find a viable pullback to enter, because we know, yeah, IV is very, very high when we're moving at that kind of velocity. It would have had to have been like right out of the gate. So congrats if you caught it, for sure. Let's move on to the next one. So the next one you had Amazon. I don't even.
No,
I don't.
it's same thing.
Oh
I
yeah,
mean,
yeah. So this is what happens, right? We could chart Sunday, weekends, right? I think what matters, like, okay, so Monday morning, right? That's what I don't trade a whole lot because I think everything kind of resets. So, yeah, I think this is legit. If you took these trades Friday, you might maybe we start doing that, right? Because like every single time they play out essentially. And then let's take a look at Amazon. Boom. Yeah.
already moving back towards 3,000.
Jesus. Sorry. Language.
So
Here's that.
yeah,
Here's that wedge. Here you go. Right, but you have room.
It presented an opportunity to get in before it made its move this morning for me, anyway. But
Yeah, I mean it doesn't mean that there won't be another one coming in.
yeah,
But yeah, this is a good level. So there's your first target. You're pretty much almost there. And you want to look for, well, at this point, maybe this is an opportunity to short and pull it back down, or maybe sell some call credit spreads depending on where IV is right now. I know it's pretty high across the board, so that's all possibilities. Options give you like unlimited options, right? Could you sell a credit spread, call credit spread somewhere up in here, and actually pull in some money? For sure, right? Maybe if it gets away from you, sell on a pullback, you sell a put credit spread somewhere down here, right? Or you find this level, maybe it's even way down here. But can you make money doing that? Yeah, definitely. I think those are the things. Most of the time, people are just looking for these short burst buying outright calls for day trades and puts. They're very short, maybe 1 to 2 hour trades. Very profitable sometimes, but just there are other options as well. So, next one we had Microsoft. Yeah, I already know this one. This one was on my list too. Yeah, so it's just what happens, right? Rebounding right off 280. Boom. Right? Beautiful tag. Beautiful tag. You would need to have the guts to slap the buy button right there to get that, right? And that's kind of what trading's about. Like you have your levels, you trust your levels, and you take action on them, right? After some period of time, right, you start to build confidence in your levels. Ken is pinging. Boeing, yeah. I will do Boeing. Let's finish Microsoft real quick. Yeah. So, sorry. So this was our earnings trade. That one paid out well. Microsoft, and actually, so this was our earnings range right off of here. So we're starting to develop a new potential trade here on Microsoft. So we want to see it hold. It actually pulled back quite a bit. So this line 306.70 goes back all the way here, October. Also, rough bounce, early January, and this whole chop range right before that last recent sell-off. So we might chop here for a little bit. I would be hesitant to put on a big trade just yet. But something like that actually looks good for probably an iron condor while the market kind of reassesses the situation right now. Very likely. I'm getting kind of parched. But yeah, from a weekly perspective, weekly candles, oh yeah, you're clean above here. Unfortunately, your next target is very close, 315, which you essentially tagged. So if we get that bounce, man, this is prior month highs and lows. This looks fairly swingable. Ooh, now that I look at it. So maybe, again, potential, maybe not a condor, maybe a directional condor, maybe a risk reversal. We'll have some ideas. We got a request for Boeing. All right, I like this. So Boeing. So when I'm doing this, I'll take a quick look first, monthly, right? Wow, look at this stupid chart. This thing is out of control. So here's December, high, low, right? Purple lines. I don't need this teal thing. Get that out of there. I actually don't really need moving averages. Oops. So I'm going to take those off for now. And I'm going to just mark this week's high-low. So right now, we have a full-blown inside week starting to appear. No trade, right? From a daily perspective, you can kind of start drilling it in. And so we start high, and we start working our way down. That's how this works. Cool. So daily, high yesterday or Friday, and also the low was low of the week. Today we have a bar clean above. Where's your target? Right? High-end target, we can say clearly right here, right? 199. More realistic target, we've unfortunately already hit at 196.30. So now we start kind of drilling in. We tag that. Cool. We remember this 190, right? This was yesterday's high. So on a 1 hour, yeah, yesterday's high. Do I see a potential entry here? Yeah, we can see something starting to pop up. So here we would look 190.52, and then again, this kind of set up right to here, and if we can push through, maybe to 206. Ooh, that's a good trade. I like this potential. Conversely, right, because we don't really care where it's going, up or down, no bias directionally. If we trade below 190.75, can we see 180s come back in play? 185s? Yeah, we totally can. So the market's been in what is called like broadening range. And so I don't know for sure, but is Boeing doing the same thing? Yeah, it looks like it is. So if we have a broadening range, we have a series of, kind of call it lower lows. Let's see. And we'll this is daily. So lower lows, but also higher highs. Yeah. It's not crazy broadening range, but it's there. Let's see. Let's take it right in there. So, and you're kind of at this pivot, right? So if we're, and let's zoom into the 15. Here, can I hit both ends of this range? I totally can. Very plausible. Very possible. Could be an opportunity for one of those strangles. Actually. But the pivot is decidedly 190.77. So at that price level, if we can get that, that's what you want to be aware of. Above 196.60, that's when you're going to take your next trigger up to 206, right? Below 190, if this breaks down, first target down here, you can have a stretch target. That's pretty stretched, but we'll see, right? So what does this triangle look like? Let's see if I can pull it up. We're going a little bit long on this one today, but hopefully that's okay. So Boeing, let's see. What kind of time frame is it? When does Boeing report? That's the first thing I want to look at when I'm looking at a potential earnings or potential trade. So January 26th, they reported already. Did they report? Yeah, they were early.
Yeah.
All right, so we're in the clear. What kind of time frame do I want? So first thing I'm going to do is I'm going to look at option time and sales and see where the block orders. I got block orders around March 4th and February monthlies. So I got February monthly, February 18th. A lot of 200 calls, even 200, 207.50 spreads. I see March 4th, 200 to 210 debit spreads to the upside. To the downside, I got a lot of February 175 puts. There you go. There's a trade. So, February 175 put, February 200 call. Super simple. Let's confirm with volume. $200 call for February. 2,600 volume today on 5,400 open interest. That's good. Checks all the boxes. Currently trading at 435. So let's mark that. 175 put. Trading with 3,650 volume on 1,700 open interest. Also checks all the boxes. Trading for $200. So what do we do with this? We can load them both up. So total cost for that strangle. It's not a straddle. It's a strangle. Let's see if I can pop this out for you guys. Detach. Hopefully I don't have another complete meltdown on this computer. Right? So this would be buying 200 call and 175 put. Assuming for February monthly, assuming we're at that pivot point, maybe it trades somewhere around there. This doesn't really have, this is your risk kind of level for today, between 193 and 181. Small risk level. We can use price slices. This is the dollar amount. Here's today's date. We want to kind of move it forward as time goes. Here is where your Greeks kind of come into play. This is a little bit skewed. So this would be where you start, right? Once you get a direction, you could separate this trade and individually put like a trailing stop on each one of them. But this would be a good starting point actually for a strangle if you're on that pivot. So I don't know which direction it can be. I see a potential broadening range where I can get a lot of movement. I like that type of trade. Hopefully that makes sense. Otherwise, if we are above one of these trigger levels points, those are the calls or the puts I would focus in on. Also, just for swing trading type things. If you really want to hold them, you know, hopefully you're working with some people that can teach you how to do spreads. Again, Thursday we'll go through what we can do with some of those things. We'll do some debit spreads, credit spreads, and show you how to manage that. And then as we go on through options acceleration, we're actually getting to some things like time spreads, which this actually sets up really nice for as well. But that's all I got for now, guys. I think we're good. We went through a lot of content. And we're at time. Cool. So I'll see you in the servers. Adios, guys.